Today we'll discuss about questions based on guarantee of profits when firm incurs loss. Let's begin. Guarantee of profits whenever firm incurs loss. Under this situation, first of all, loss is distributed between the partners and then total amount of deficiency is calculated, which is borne by the partner who has a given guarantee of minimum profits. Let's discuss one example. Suppose A, B and C are partners in a firm with 2:2:1 ratio. C is guaranteed a minimum profit of rupees 2 lakh. For the year, any deficiency is to be borne by A and B in 4:1 ratio. Losses for the year were rupees 1 lakh. Pass the necessary journal entries. This question was asked in CBSE 2015. So first of all, see, in this case there are losses of rupees 1 lakh, whereas C has been given guarantee of rupees 2 lakh. So first of all, in such type of questions, first of all we'll distribute the initial loss in the profit sharing ratio of the partners. Let's begin here. So to do the distribution of loss, A's loss equals to 1 lakh multiplied by 2 by 5, that comes out to be 40,000. Then B's loss equals to 40,000, that is they have the same ratio 2:2:1. So B and A are having same loss of 40,000. Now C's loss 1 lakh multiplied by 1 by 5, that comes out to be 20,000. So first step we have done distribution of loss. Then we'll find out the total amount of deficiency. So here C's loss was 20,000 as per previous step. Then the guarantee of profit given to C was of rupees 2 lakh. So the total amount of deficiency comes out to be 2,20,000. This 2,20,000 deficiency is to be borne by the partner A and B in 4:1 ratio. This 4:1 ratio is given in the question. So amount of deficiency to be borne by A equals to the total amount of deficiency, that is 2,20,000 multiplied by 4 by 5. That comes out to be 1,76,000. Now the amount of deficiency to be borne by B, so total amount of deficiency 2,20,000 multiplied by 1 by 5 gives us 44,000. Now we have to pass the journal entry as asked in the question. So here the first journal entry is related to the distribution of loss. So whenever the loss is being distributed, the partners' capital accounts are debited. So here A's capital account debit, B's capital account debit, C's capital account debit, and this is the profit which we had shared in 2:2:1 ratio. So 40,000, 40,000 and 20,000. After that we had calculated the total deficiency which was being borne by A and B in 4:1 ratio. So that deficiency, so here A's capital account debit, B's capital account debit to C's capital account. So 1,76,000, then 44,000 and 2,20,000 will be given to C. So the adjustment is being done in the capital accounts of the partners. Let's discuss another question. P, Q and R entered into a partnership on 1st April 2024 to share profits in the ratio of 2:1:1. It was provided in the deed that R's share of profit will not be less than rupees 70,000 per annum. The losses for the year ended 31st March 2025 were rupees 2 lakh before allowing interest rupees 8,000 on P's loan which is due for the current year. You are required to show necessary accounts for division of loss and also pass the necessary journal entries. So if you understand the question, here partner R is been given a guarantee of rupees 70,000 profit, whereas the firm has incurred loss of rupees 2 lakh before allowing interest. It means the interest, which is a charge, interest on loan, partner's loan, interest on loan is a charge against the profit, or if there are losses, then interest will further increase the loss. So these adjustments are to be done for the financial year, which is beginning on 1st April 2024 and ending on 31st March 2025. So whenever the question asks for necessary accounts and journal entry, first of all we'll pass the journal entries and then we'll show the necessary account. Here necessary account for division of loss means profit and loss account. So first of all we'll make the working note. So here interest on P's loan equals to rupees 8,000. Since interest on loan is a charge, it will further increase the loss of the firm. So initially the loss was rupees 2 lakh. Then interest on P's loan equals to 8,000. Total loss becomes 2 lakh 8,000. This loss will be distributed in P, Q and R in 2:1 ratio. That is their profit sharing ratio. Let's distribute the losses. So here P's loss equals to 2,08,000 multiplied by 2 by 4. So the ratio is 2:1:1. So here Q's loss equals to 2,08,000 multiplied by 1 by 4. That comes out 52,000. R's loss is equivalent to Q's, that is 2,08,000 multiplied by 1 by 4. That comes out to be rupees 52,000. So here total loss for P 1,04,000, for Q 52,000, for R 52,000. Now the next step we have to calculate the total amount of deficiency of R's loss. So R's loss equals to rupees 52,000. Then R's guaranteed profit is 70,000. Total amount of deficiency comes out to be rupees 1,22,000. Since in this question specifically not mentioned who will bear the deficiency, thus partner P and Q will bear the loss in their profit sharing ratio, that is 2:1. So here this is the total loss we can see. Now the deficiency will be borne by P and Q. In which ratio? In 2:1 ratio. So total deficiency 1,22,000 multiplied by 2 by 3 gives us 81,333. Then deficiency to be borne by Q, that comes out to be 1,20,000 multiplied by 1 by 3. That gives us 40,667. So now we will pass the journal entry. So the journal entry is to be passed on the closing date because we are charging the interest on P's loan. So that is 31st March 2025. So interest on P's loan account debit to P's loan account. Whenever the interest is being given to partners on their loan account, that is to be debited. That is to be debited on their P's loan account, on their partner's loan account. So interest on P's loan account debit to P's loan account. Next, this loan, this interest being the expense for the firm, so it will be charged from the profit and loss account. So that is profit and loss account debit to interest on P's loan account. That comes out to be 8,000. Next, we have found the total deficiency in the profit, that is to be shared by the partner P and Q in 2:1 ratio. That we have already calculated. So we are passing the entry P's capital account debit, Q's capital account debit to R's capital account, that is 81,333, 40,667, which equals to 1,22,000. After this, we'll show the profit and loss account. So the total loss was in the beginning, so we are writing to balance brought down 2 lakh, and then the further interest on P's loan account has increased the loss. So total loss now becomes 2,08,000. We are transferring this to the partner's capital account. So by net loss transferred to partner's capital account, the P's capital account 1,04,000, Q's capital account 52,000, and R's capital account 52,000. This is how this 2,08,000 is being distributed between the partners. So since we are asked to show the distribution of loss, we'll make the profit and loss account. I hope with this you have understood the question based on guarantee of profit whenever the firm incurs loss. We'll discuss questions on the basis of adjustment in closed accounts in my next video. Please do like and subscribe my channel. Thank you.